வணக்கம் மக்களே. In this video we are going to look about index fund. Whether you are a new investor or you have been a seasoned investor, index fund can be a great tool in your wealth building journey. So let's see about index fund with an example. Let's say you're going to an Indian restaurant and opting for a thali. By opting for a thali, you are provided with a different variety of dishes. Because of this, your risk is spread out. Let's say you don't like a dish, there is great chance that there might be other dish that you will really like. Similarly, by choosing an index fund, you are provided with a thali of different stocks. If one stock doesn't perform well, you still have many other stocks that will reduce your overall risk and give you good returns. Now let's see why we need to choose an index fund. It gives three big advantages. One is diversification. 2. Lower fees. 3. A passive way to invest your money. First, let's see about the diversification. When you buy an index fund such as the S&P 500 or the Nifty 50, you are provided with several different company stocks in one individual fund. By doing so, you are reducing the risk associated with buying single stocks, as it can sometimes go up really fast. At the same time, it can come down really fast too. Second reason why we choose index fund is the lower fees associated with it. Let's say you're buying an index fund. The index fund manager does not have to do any active management because he or she is going to track the index, so it is easier for them, so it reduces the cost of management, which in turn gives you more return on the long term. Third reason why I choose index funds is its passive form of investing. You just buy and hold the index fund for the long haul and let the market do its wonder. By doing so, you're avoiding the risk and stress associated with picking the good stocks and getting good returns on the long term. Most importantly, it is really easy and accessible nowadays. You can buy these index funds online through reputable brokerages like Fidelity, Vanguard, and Charles Schwab. I personally use Fidelity for my index fund needs. As with any form of investing in index fund has its own risk. Let's say if you are investing in S&P 500, as the market goes up, you make money, but as the market comes down, you lose money. But historically, if you hold the money for at least a decade, you end up with a positive return. So only invest money that you won't need for the next 10 years. If you are in the US, I personally prefer to go with VOO, which is a Vanguard fund that tracks the top 500 companies in the US. It closely mirrors the index, and it is a very good fund if you want to use this for long-term growth. And if you are in India, you can go with Nifty 50 index fund, which will track the performance of the top 50 companies in India. And same with VOO, this also gives you good growth potential over the long term. So in summary, index fund is a great tool to use in your wealth building journey. The three important things to remember are diversification, lower fees, and passive way to invest your money. If you buy and hold the index for the long term of at least 10 years, historically it has proven to give positive returns. If you are in India, you can go with the Nifty 50 index fund, and if you're in the US, you can go for an S&P 500 index fund like VOO. More such interesting topics to come in the upcoming video, so please like and share this video and subscribe to my channel. Let's talk money.